Hello and a very warm welcome to a brand new series, ETSTUDIOS CFO Blueprint, in association with ET CFO. I'm your host, Devina Lason. Now, on this series, we are thrilled to bring you conversations with India's leading CFOs to help us get unique insights about the journey of the modern CFO. Today, we're here to talk about thriving through adversity. What is expected of a CFO in today's times? Now, in today's rapidly changing and very complex business environment, the role of the Chief Financial Officer has undergone a significant transformation. Traditionally perceived as financial gatekeepers, CFOs are now expected to be strategic visionaries and indispensable partners in the shaping of success and sustainability of modern enterprises. Joining me to deep dive into this and to find out what it takes for CFOs to thrive in today's ever-changing corporate world are esteemed guests. I'm very happy to welcome our guest, Ramesh Subramanyam, Group CFO, Hinduja Group, and Giridhar Sanjeevi, CFO, the Indian Hotel Company Limited. All right, gentlemen, welcome. It's really a pleasure to have you here today. Thank you so much for joining us on ETSTUDIOS.
Thank you. Our pleasure.
So, let's just kickstart the conversation with really understanding the basics, which is how have you and your experiences seen the role of the CFO evolving over the years? And what are really some of the main challenges that you see coming up today that might not have existed a few years ago? Giri, maybe we can start with you.
Why not? No, thank you for having me here. I think one of the ways to look at this is that while the CEO owns the strategy, I think to a great extent, the CFO ends up owning the operating model actually.
Yes.
And therefore, when you look at companies with different levels of complexity, I think the role of owning the operating model is quite important because operating model drives effectiveness, efficiency, and the financial performance of the company actually. So I think that is the first thing that I would say.
Yeah.
And hence I think I would sort of encourage CFOs to look at their roles as owning the operating model. And that brings a whole lot of different perspective beyond just looking at a narrow function actually. So that is the first thing I will say. And the second thing I will say is that especially whether you're a listed CFO of a listed company or a CFO of an unlisted company, you are the spokesperson to your investors actually.
Yes.
You are a spokesperson to the board. And I think the importance of board as well as investor engagement has now become so important. Especially, companies, listed companies have a significant institutional shareholding today.
Yes.
And you've got all kinds of shareholders, and especially if you're a CFO of a US listed company, then you're dealing with a whole bunch of other regulatory overlays on top actually. So hence, I think being the CFO of, being the spokesperson creates its own dynamics and importance actually. And the CFO is looked upon as a person to do that actually.
Yeah.
So I would say that is one big part of the evolution that we need to be conscious of. The second thing is that really what is a CFO doing actually? He is really helping the setting up of the annual plans, working alongside the CEO and the leadership team, but he's also helping delivering the execution actually, monitoring the execution, helping with the execution. And really speaking, we always talk about focus on profitability, focus on free cash flow, focus on clean balance sheets. I think these are 2-3 things which at least personally I look at actually. So this is the second one I would say. The third thing I think in terms of some of the complexities which is really hitting is the whole compliance environment. Compliance environment is now getting very tough actually. Whether you look at SEBI, Companies Act, NFRA and others, I think the regulators are demanding more and more in terms of companies, in terms of disclosures in particular and timely disclosures. There's a great fiduciary responsibility on the management and the board in terms of communicating effectively externally in time, so that everybody is on the same page actually. So I think compliance environment is getting tough. And I think those are steps in the right direction. I think the challenge for CFOs is to ensure that their organizations are ready in terms of the systems and processes to help with the compliances.
Right.
And of course, there's a whole ethical aspect in terms of making sure that you comply in a fair and transparent manner actually. Yeah. That's the other one. And the final one I will say to your question now is the whole emphasis now on sustainability and ESG. I think that is now really getting the getting focus actually. And CFOs are naturally playing a big role here. And it's not just driven by regulation, because for me ESG is not just about being at a minimal compliant. It is also about how it dovetails into the strategy That's the second one. And third, of course, for companies like us in the Tata Group, it's also a statement of purpose, actually.
Yes.
So I think compliance, strategy, purpose. So I think the roles of CFOs have changed. And what I've spoken about are some facets of it. Clearly, there are so many other facets which are possible. But I think these are pretty important, actually.
Absolutely.
Yeah.
Thank you for setting that so coherently, at the very onset. And Ramesh, let's get you in on this. So we're understanding how the role of the CFO is evolving and the various responsibilities and therefore the various challenges that come with it. I'm curious, for someone like yourself, a veteran in the industry, what are some of the leadership qualities you would say that CFOs should aspire to have in order to deal with all these challenges, to deal with the role that's ever evolving, to deal with the compliance regulations getting tighter? What are some of the leadership qualities CFOs should look at?
First of all, thank you for having me here.
Thank you.
Today what is happening is the CFO, when you say adversity or difficulties or challenges, then they are both in good times and bad times. I think one of the key qualities that today, as I find CFOs have to acquire, is to stay balanced and grounded in both the scenarios. If things are going good, you still have to contain the rising expectations of the stakeholders. And if you're doing bad, then there's a bigger role in getting things right. So I would say that the very important quality is to really stay true to one of the fundamental things that you're taught, which is about the genuineness of the information, the logical flow of the communication that the company puts out, how to back it up. Secondly, being the advisor to the business and the CEO to not to be over exuberant, because you have to be always, one of the CFO's role is to really contain the level of excitement to ensure that we don't trip, because it's a long game. So I think the CFO is always the person who can show sometimes what could be a more, I would say, long-termish way of dealing with the situation. A lot is also to do with the communication capabilities that a CFO develops, both with internal stakeholders and external stakeholders. I think this is something, unfortunately, our training in the early days don't teach us. Some of us pick up during the career as to how to manage this. So I would say that these challenges are something that comes out of training. And today what is happening is, with the plethora of new regulations, it is almost becoming impossible to keep track. So one of the art of juggling for the CFO is to really identify which information is important for him and which is not, which is more relevant, which is not, whom to depend on which, and therefore the whole teamwork that is in and around the CFO to kind of ensure that none of these items get missed, but you can't spend time on just one item. For example, today if I spend a whole day on SEBI's new regulation, it may be short, but I can't spend the whole day. So therefore you have to figure out who in the team can really ensure that that is taken care of. So I think this is typical of what's happening today. The CFO is becoming more and more, I would say, focused on managing the big picture rather than the early days when CFOs used to predominantly be worried about putting up the financial results. And now it's getting financial results as a percentage of the time spent for the CFO is actually reducing, given the other complexities that are coming.
Very interesting. Well, you've just said that the time spent on managing the actual financials and the balance sheet is reducing, yet of course it is a pivotal and fundamental aspect of the role. And I'm also curious, how do you sort of keep in balance the biggest aim of the role, which is the business strategy, but also keeping balance sheet in check, keeping costs in check? How do you keep in mind the business strategy with cost cutting and cost management effectively today?
Okay. No, I think as I said earlier, profitability, free cash flows, and clean balance sheets are primarily a focus for the CFOs, actually. And I think ultimately strategy by itself is not good enough. It's strategy to action, actually, and that's where the operating model comes into play. I think today, I mean, if you look at the overall scenario in terms of what's happening in India, I think if you look at the startup world as an example, many of these people are struggling because the fundamentals of the P&L are not there, which means that, companies are incurring cost at what I call as a GM1 level actually. At GM1 level is nothing but your sales minus variable cost is a loss, which means that, and that is getting justified. I know there is a startup company which ensures delivery of packages between different people. And I know that they incur a loss on every order actually. But the way they get funded is because they are changing consumer behavior in terms of depending on delivery services. You want something delivered from your house to my house or your office to my office, and these boys do it actually. I think that's a very different kind of working. And if you are operating in a business where a GM1 is a loss, I think you need to be very clear as to how quickly it can become a profit. I'm personally not comfortable in operating in an environment where the GM1 is a loss actually. I'm fundamentally operating in a position where I've worked in environments which have been fundamentally profitable. But when it comes to fundamental profitability, cost management is also not an automatic, recipe for profit management. Like when the pandemic hit, I think we took a call as part of our group ethos saying that we will not fire any permanent person actually. And I think that was part of the ethos, which means that you absorbed it as part of your cost of doing business. Yes. And people are a fundamental asset actually. So therefore, I think cost management is one very narrow way of looking at it. I would sort of look at it more from an operating model efficacy and efficiency actually. That's a much better way of looking at it. And secondly, the other way I would look at profitability is that ultimately for businesses, I think as he pointed out briefly, is that it's a long term, it's a marathon actually, which means in the long term, it's a series of short terms actually. So which means the way I look at performance, cost management, profitability, etc., is to say that as long as directionally I am kind of moving on my path to achieve the long term, I'm not so worried about missing something in the short term. However, what is important is that I hit my milestones actually. As long as I hit my milestones and I'm on the path, then I'm quite comfortable actually. And be prepared to do course corrections. I think that's why the review, feedback and corrective mechanism is very important actually.
Just to add to what he said, I think there's a big change in the role of the CFO. Earlier, we used to, in our younger days, and maybe would also resonate with that, we used to take the business model as a given. So business strategy as a given. And our job was just to see, as a result of that business strategy, how the company is performing and reporting it. That was pretty much, expectation was that. Now what has happened is you are also answerable for how you look at the future of the company. Board expects you to be aware of it. And board also asks you a simple question like, is your strategy working according to you? Now that's a simple question, but it's a very complicated answer. Yes. So the important lesson there is the CFO nowadays has to get involved in strategy formation, because unless he understands where is the business heading and in what time span, and then as Giri said, you have to break that time span into milestones. That's when you step in and say that, are we as per the milestone? Okay, you can't pretty much temper the ambitions or aspirations of a business. All you can do is to bring some clarity that, if that is your aspiration and this is what you're supposed to do in this year, is the annual plan incorporating that? Is the performance mirroring what could have been the path to that profitability? So even if it is a loss making, today the CFO cannot complain strictly. All he has to ask is this a starting point to some end, which is the aimed, let's say, result. So I think this is where the CFO comes in, and even in an environment which is completely uncertain and no clarity on the future, but there is a view, there is a vision, then you have to break the vision and apply your mind and say that, are we on track? Yeah. I think that's the important question.
Absolutely. So how do you weigh up short-term profitability versus long-term sustainability? How do you approach that challenge?
Let's break down the concept. So long-term sustainability means what? Long-term sustainability means there is a vision for the company. And there is probably a statement made out by the board chairman or the CEO that this is what we want to become. So that I would call that as really the I would say firm idea about what long-term sustainable business means for that company. Now, What you have to do is really ask that question, that is there a plan to it? Is there a projection to it? Is there a breakdown of assumptions leading to that so-called long-term sustainable target? And then you have to see that in the medium term and the short term, what does it mean? What does it mean in quarterly results? What does it mean in non-financial achievements to be delivered?
Yeah.
So, sometimes you are entering a new, let's say, market. Now there, the investment in the market is going to be a 4-year investment or a 3-year investment. You're not going to be reporting results. But what is important then is to focus on the steps to achieve that. So the short term, you focus on the stepping stones. So there is a good news in the stepping stones also. You can't just say that because it is not reflected in the financial, it's not my job.
Absolutely.
I think as an investor relations guy, you have to still put out some things which are non-financial, but relating to that. So the short-term measures are nothing but a kind of a precursor to the long-term performance. Therefore, what is important to understand is what are the levers which indicate that the long-term sustainable plan is working, and how can I prove it today? So the challenge always is sometimes the quarter and the half yearly and the yearly results do not tell you whether your strategy is in place.
Yeah.
Now, as long as we are communicating that the strategy is on track, I think your job is done. Even though the today may be bad, but investors would like to know, are you on track to something bigger? Then they're happy. So I think that is the issue beyond financial statements.
Yeah. Really fascinating. So there's so much to do just with effective communication, right? And especially what you're alluding to about communication with your investor fraternity and how you approach that. Giri, maybe you can shed some light on how this has evolved to. How do you as a CFO really approach effective communication with your investors, with the strategy when it comes to investors, especially given that there's such uncertainty across the board?
No, you're absolutely right. I think one of the most important things that we need to remember, especially in listed companies, your market cap comes because there are people out there who are willing to buy your share at the price at which it is available, and therefore the market cap is determined by the healthy demand supply, and that happens when people understand your story actually. And I think one of the other important things I will say is that investors have a choice. If they have $1 million to invest, they can invest in your company, or my company. And that choice is there actually. It's fungible. People can move money overnight actually. And therefore, I think it's very important to be able to ensure that your communication demonstrates the clarity of strategy, clarity of execution, and very importantly, the returns that shareholders can make when they invest in your company actually. I think that's number one. So I think what we have tried to do, in general, what I've tried to do is to make sure that we put out our strategy to the external investors also in advance actually, which means, and that I believe is a fairly good way of saying that this is what I want to achieve actually. And then you measure yourself against it. So for instance, when we announced our aspiration, we announced it to the market saying that we will grow by X%, our profitability will grow by Y%, and we set it 5 years ahead actually. So, and every quarter you then report against it. And that puts a discipline actually. So that is number one. Number two, one thing I've learned over the years is that your internal MIS and your shareholder MIS is the same. I mean, there are companies which do not adopt that. I think for me, it's the same actually, because ultimately you can't have a different language internally and a different language externally. Your internal folks must understand what your shareholders are asking. And ultimately, what you speak to the shareholders must reflect what your internal teams are doing, which means you're better off talking from the same document actually. And that's a very big thing which many companies do not do actually. That's the second one I will say. The third thing I will say is that communication is also about communicating when times are good and when times are bad actually. I think a lot of companies are very happy to do extraordinary investor communication when times are good, but shy away from communicating when they are bad actually. I think that is not good, because ultimately on the cap table, we want investors to sort of stay with us. And you look at you, and I've met scores of investors. Ultimately, they're also managing other people's monies actually. And they fundamentally trust the quality of management more than anything else. And the first comes the quality of management, next comes the story and strategy, and then comes the execution. And they also understand that there may be times when your performance could be lower actually. But as long as you're able to explain it and you can show them a path, many of them are able to hold on actually.
Yeah.
I've known investors who have stayed with companies even during times of losses actually, not for anything else, because they say, you know what, it doesn't matter.
Yeah.
Because most investors do not churn their portfolios. They kind of stay put actually. In fact, I think churning portfolios is actually a negative value driver mostly, because you can't time the market.
Right.
So hence I think communication, both in times good and bad, is very important actually.
Fantastic.
And I think the other thing, I think these are some of the factors which I will say. And I think really clear, honest communication is what I really like actually.
Absolutely.
Yeah.
I mean, that's so fundamental what you're saying, that the communication needs to be clear and honest in both scenarios, the good times and the bad. Same point to you, Ramesh. How do you go about this communication process, both with stakeholders, but even as a CFO internally, within the board, within the teams at large? How do you go about that?
First is, if you get your data right, you are very sure that you're not talking to two different people with two different sets of conclusions or information. The truth has to be one. So once you get that, then it's easier to deal with. Second is that, you can't defend the indefensible. Suppose the company is not doing well, the macro environment is bad, and there are very clear telltale signs of things not working out. I think it will be naive to think that the investors don't understand, the markets don't understand. And then if we keep defending it beyond a point, it doesn't make sense. So it comes back to transparency and being a little candid and honest. Once you do that, investors realize that the company is acknowledging. And acknowledging is half the problem solved. The second thing is, how do you come out of it? What action plans have you got in place? The focus shifts on then the improvement part. And I have seen many times that if you put the right communication to the investors, internally also, that pressure to deliver improves. If you try to defend the indefensible and keep on arguing against the line of thought with your investors have, actually you will not take appropriate actions. Once you are on the same page on the problem, you are on the same page on the perception, it's easier to work out a solution. Then you're aligned on what's wrong and what's to be done.
Absolutely.
And then it's a question of just kind of putting out as to how you progressed from time to time on those
accountability.
So I think starting from your own management meetings to the boards and thereafter to the external world, if you stay true to the reality of the business and the challenges, you tend to get it right sooner or later. You may suffer for a short term. Many times we don't want to convey the bad news because we think that it's too early or it will upset the apple cart, etc., etc. I think in the long run it doesn't matter, because in the investors come back. When you're doing well, they will come back. So I think a little bit of clarity and honesty goes in a long way in building long-term trust. So the next time you make an announcement, people trust you. That okay, you said in the past and it has worked, so this time it will also work. So they give you that benefit of doubt, which you don't get if you repeatedly keep messaging things which do not happen at the end.
Absolutely. Invaluable. It's so fundamental, really, but really invaluable. You brought up a very interesting point also, to truly understand the metrics within your own organization, right? Understanding the data, understanding where the facts and figures are pointed. How, Giri, in your experience, do you go about ensuring that you have the most accurate set of information about your own organization? And are there any specific tools that you use to aid this process, especially in an age where data is king?
No, I think the whole I think you need relevant information. And I think what is happening about MIS is really speaking, you're not really reporting, while of course you have an obligation to report the month that has just gone by. I think it's really important to have predictive analytics actually, because it's really important. The role of the CFO, the role of the management team is to be able to really deliver what you're promised. And therefore, the forward-looking analytics is becoming extremely critical actually. And how you do the forward-looking analytics is really, some companies are very much advanced on the data analytics curve, and therefore they may be able to get tailor-made analytics which tell them what needs to be done. Other companies may be on the journey, and therefore they will have to use other methods to do it. But irrespective of whether you use advanced data analytics or otherwise, I think focus on the future is what I would say. So that's number one. The second thing is that the difference between performance and health, I think, is very important to remember. And what is performance? For instance, if you have to sell 100 units of a product, and let's say that's my sales target for the month. And let's say normally the sales price is 100 rupees per unit actually. And there's a tough market actually. Supposing I were to sell the 100 units for say 60 rupees as opposed to 100 rupees actually, I would still have achieved the 100 unit sale.
Yeah.
So the financial performance may still be achieved, but the health is impacted because I have now destroyed maybe the price proposition for the product actually. So the health metrics becomes extremely important. And health, this is one aspect of health metrics. In various industries, NPS scores becomes very important because that tells you the voice of the customer actually. So most of the consumer facing industries measure NPS very religiously actually. And today data analytic tools are also possible which give you sentiment analysis as an example actually, which actually trolls your Facebook and all your social media in terms of what customers are saying. And then you use artificial intelligence, tools to sort of make sense of that. So I think sentiment analysis becomes important actually. But the NPS scores, the health of the health parameters become really important. In fact, when you talk about short term versus long term, you can sacrifice a financial short term provided your long term non-financial health is okay actually. So as long as your health is okay, you're okay with your short term down. But if your health is not okay, then you need to fundamentally change things. Because if a customer wants more and he's criticizing the service or the product you're providing, then you need to do something about it because the disaster is waiting for you actually.
No, that's a great point. The health of the organization, of course, is at the center of any strategy. And again, we started, Ramesh, where you giving your insights on the qualities it takes for effective leadership in a CFO. Kind of going back to that, what does it take in a CFO to really stand out in those times where the health of the company must come first, regardless of what the short-term outlook may look like? Like, what does it take to really push through and have that long-term vision?
I think that goes back to understanding your business deeply. So I think one of the important things is to know what drives the value, what are the value drivers, what drives market performance, what is your competition. I think once you understand that, you tend to then focus on what is fundamentally wrong today or what can be improved today. And then you would really have to also ask whether the current ways of measurement of performance is adequate enough to face the current issues at hand. So when suppose you have a business where cash from the customers is not coming in due to some temporary economic phenomenon, then that's the important thing at that time. Now, how do you measure that? Then how deep you go to measure where is the issue? Is it an internal issue? Is it an external issue? Now, in that, the business needs a lot of insight, which typically a CFO or his people can give. And I think that is where when things are really a little tricky, you have to actually quickly change gears, whether you see what metrics to follow or the focus of your own time. I know that there were times in which, I as a CFO had to focus on raw material part because it became a big issue. So when prices skyrocket, then every day a decision has to be taken. It has consequences. So then naturally you get involved. So how to distribute your time on the priority? I think that is something which is very, very critical. Second is how do you also communicate this understanding with your team the next round? That is very important because if they are aware of what the current business priorities are, sometimes they will know where to be flexible. So you can't have a situation when the business is struggling with one particular issue or three particular issues and the CFO of that business suddenly talks a language which is typical of a CFO, but that's not the appropriate thing to say at that point. Now, how do you guide him so that he doesn't completely let his guard down and at the same time be supportive to the business at that time to deliver? So sometimes you have to be truly a partner. It is very easy to have the controller hat in place. But sometimes you will just step out of the controller and ask, what does the business ask? What does it need? How we can support decisions which on a normal day would have been, you would have stopped it. But on a difficult day, that, it is important for the business to get that right. So you have to be part of the risk. It's very easy for a CFO to point out risk and stay there. But then are you party to the risk? Sometimes you have to be. And therefore, you have to sometimes take the blame for being party to a decision which is wrong. But as long as you've done your homework right and the risk analysis right and have put your best foot forward in supporting, I think your job is done.
I think just to build on what he's saying, I think I use a sports terminology usually. To use a football parlance or a cricket parlance, the CFO is not here keeping just the score. His job is also to score goals, actually.
Wow.
So I think if you look at it on that basis, I think the CFO has to enable risk taking, actually, because a CFO can't be a CFO. I think so. When you say so, many CFOs tend to be CFNOs, and when you're a CFNO, then you don't enable risk taking. And I think what really helps, I think, when a CFO can see the risk, because usually is the observer. And one thing that I do find useful is scenario planning, actually, which means that if there is an uncertain situation, you do a scenario planning, or you don't know what the outcomes are. And I think scenario planning is a very powerful way of communicating with teams also. But then you are using their own language to sort of say, okay, this is what you want to do. Let's see what the outcomes might be. If outcome 1 is achieved, outcome 2 is achieved, outcome 3 is achieved, then they understand. And then you sort of build alignment saying that what is the likely scenario, or what is the strategic choice to be made when you look at these 3 scenarios, actually. So scenario planning and helps the CFO to effectively communicate and make sure that the organization takes a considered strategic choice, which can then lead. And then, of course, you do reviews and course corrections, actually. I think...
In fact, very interestingly, once we were bidding for some contract, and that contract, was a very good contract, and we could stretch to get that contract. So the business quoted a number, and I found the whole bid so attractive that I went ahead and said that up the bid. So everyone was very upset. I think CFO is asking you to up the bid. That means he's willing to spend more money. And the business team is telling no. So I mean, at that time, my gut feel was that if we don't up the bid, we'll lose the bid. And it was a very important bid. I think 5 years down the line, I think it was a good decision. It could have gone the other way also. But I'm just saying sometimes you have to just be, to think differently and think what is good for the company and the business rather than just think about what your role is.
Yeah, thank you for sharing that anecdote. Actually, that really just puts in perspective these real life examples. What role does keeping up with the latest trends, financial trends, compliances? We spoke a lot about this. What role does that play in ensuring that you're not a CFO, as you said, and really sort of empowered to guide your organizations to make the right decisions?
I think today, keeping updated is very difficult. When we were young, we used to look out and search for publications and magazines which would give us the update. Today, you have to decide what not to see. There are so many bombarding you day in, day out. I think the fundamentals are there that, your business dailies are very important, because just every day there's news happening. And I think for your sector, every company has, and I've always found that it's very useful to have a person who's responsible for collating all this stuff about the industry so that you can come to know everything that's happening. There are always industry journals which are there. You have a great paucity of time. I find meeting people as the best way to really get updated, because during that conversations, what you hear personally is much more powerful than reading 10 newsletters. And it also combines business with, let's say, knowledge. I don't think there is any great, I would say, formula for that. I also use my executive assistant to kind of tell me what is it that I didn't know. So that also helps.
I think from my perspective, I think a couple of things have helped, actually. So number one is, I think the challenge is twofold. Number one is to understand what are the changes in regulation. And number two is to understand the implications of the change on your own business. And I think both are important. I think what I've recently done, especially with this slew of announcements that SEBI and NFRA and others are making, I've actually appointed a legal firm to work with the CFO's office directly to sort of keep me updated in terms of what is changing. That is number one. And secondly, there is a weekly huddle that I'm now doing with my team, just to make sure that we understand what's happening with the regulation, and more importantly, as I said, how does it apply to us? Because every regulation doesn't apply. And I think in large organizations that we all run, I think sometimes compliance means that you have a burden of compliance in terms of ultimately reporting, but you also need the inputs from maybe the bottommost rung of the organization in some part of the, maybe in Kanyakumari as an example. So you need to make sure that the information is available actually. So I think those are the two things actually. And it's also forcing me to sort of think about my own, MIS in terms of making sure that we know what's happening within our companies. It's not that we discover it for normal circumstances. Finding out something 3 days later may be okay, but when SEBI says you need to report within 12 hours, then it's not okay.
Yeah.
I think, and that is where I think it is getting difficult, and I think constant engagement is really the key actually. Yeah.
Well, gentlemen, thank you. You've shared so much insight. It's going to be really valuable conversation, I think, for all our viewers, just to understand these various perspectives. And of course, challenges is really at the center of everything that a person in a leadership position like yourselves have to deal with. And just sort of on a closing note, is there any sort of top tip or top 2 tips that you would give to people budding in this space, just entering the workforce, when it comes to really sort of resilience and clarity for a CFO, especially in such challenging times?
I would say, I think combining the commercial and analytical acumen and skills with a grounded understanding of the business drivers is probably the very important, I would say, is a key ingredient of success for a CFO, because if you lose any of the three, the business understanding or the commercial part of it or the financial analysis part of it, these 3 pillars, you have to be strong. I think that's the key in my view. Of course, there are so many other things which are there, but these 3 probably would be standing out.
Yeah, fantastic.
No, I think for me, if you're a chartered accountant beginning your career as an example, I think you've already proven that you know your technical stuff. I think what is important is to build the breadth of experience. I think that is number 1. I think building the breadth of experience stands you out very well, especially as you grow higher actually. So that's number 1. Number 2, I think being curious is very important actually. I think ultimately you never know what you learn today will be used some other day. I read, for instance, any scrap of paper which comes across me actually. I mean, that's just habit. That's just habit actually. Thirdly, I think constant engagement is very important, both internally and externally. One of the most powerful ways in which I believe people learn is what I call as conversations which have no real purpose. Like I could come and have a cup of tea with you, and many times the power of that conversation is very powerful because you don't know what emerges and you build some great relationships actually. And finally, I think many times people are focused on becoming what I call as internal tigers. I think I would say that be also an external tiger actually. I think the real worth is not just internally but your own position externally actually. And finally, I think enjoy. I think every day is new and every day will not be great. I think time to reflect is another thing. I really find very useful actually, and I do it all the time. Just reflect on what's happening and that I think the ability to detach and observe yourself, I think, is a very big strength. So, I mean, I can go on, but these are some things which I found very useful, actually.
Oh, that's fantastic. These are all truly tips from leaders of what it takes to be in a leadership position. And on that note, gentlemen, thank you so much. We've been here today talking about how CFOs can thrive in adverse times. And I think you've really charted out some very profound ways in which CFOs can approach their role. Thank you for this conversation.
Thank you. Thank you, Devina.
Thank you.
Thank you.
Thanks.
All right, well, on that note, that's all we have for you on this power-packed inaugural episode of ET Studios CFO Blueprint in association with ET CFO. Do stay tuned for more such in-depth conversations where we chat with India's leading CFOs who inspire us with their success stories, leadership and insights. Until next time, many thanks for watching.